It seems like Donald Trump's presidential victory has taken the shine right out of gold. Investors piled into gold when polls showed that Donald Trump's chances for victory were improving. Now that he's won the presidential election, they're selling. Now, before the election, gold prices were expected to benefit no matter who won the presidential race. With Trump, his win seen as unsettling for the markets, therefore people head into gold, and the Clinton win seen as inflationary, both great for gold. But remarkably, neither of these scenarios have played out. There's also another factor at play too, a possible ban of gold imports enforced by the Indian government. So we've got a lot to talk about right now. We've got John Butler from Gold Money right here. As I say, what a scenario. Let's start with the whole Trump election business, because as I say, gold was actually gaining when he was doing better in the polls, because it was seen that he was going to create such uncertainty, unsettle the markets, that everyone would go into the safe haven once again.
Yes, indeed. And the fact that gold was doing somewhat better going into the final days of the campaign is part of the story. It's classic trader, buy the rumor, sell the fact. That is, when you actually get the confirmation of the surprise, the trade is already done, people take profit, and sometimes that just cascades into a quite significant correction. So don't get me wrong, it's hard to predict these things precisely, but there is a certain element of this classic pattern that we've seen. However, I think more importantly, which is leading to a bit of follow-through in this decline in the price of gold, is that amidst all the uncertainty around the election and all the rhetoric that was coming out, people sort of lost sight of the fact that Trump did always campaign as a very pro-business, pro-growth president. And now that he's actually talking about some policies to cut corporate tax, to cut income tax, these are very bullish for stocks, very bullish for financial assets. And gold in some ways is the mirror image of that. If you do want to take more risk, there's less appetite for gold.
Which is the situation we're in. But I suppose the next question has to be, how low could we go?
Well, you could go lower because, in fact, having broken through 1,200 now, which is a psychologically important round number on the one hand, and on the other hand, it also does represent, arguably, a break in the uptrend previously established roughly a year ago. So this could be the beginning of a significant consolidation. Now, I think there are good fundamental reasons why gold is not going to drop more than another $30, $40 from here. But technicals, charts, momentum, these things do take on a life of their own. And I do think it's possible we see that sort of correction before gold begins to find a floor and eventually re-enters an uptrend.
Okay. There is a scenario that this could be nothing to do with Trump. And actually, Trump is just eating up all of the headlines when it comes to gold and every other headline in the world. But actually, there's the India situation too, the fact that they could be enforcing this ban on the imports. How would that affect gold? Because they are the biggest importer, the biggest demand comes from India.
That's right. This is the world's largest gold market, and you can never lose sight of that. I mean, don't get me wrong. We think about central bank buying and selling, and we think about investors buying and selling. The single most sustainable source of demand for gold in the world is the Indian gold market, and that has been the case for years, and will probably remain the case forever. But that's why it's a bit curious, because if indeed the Indian government is serious about outright banning gold imports, politically, that is extremely unpopular. I mean, really, that sort of thing can bring down the government. Now, that said, Indians are famously very docile. They tend just to do more or less what the government tells them to do. But gold is sacred in India, and outright banning imports of gold could lead to political instability. So on the one hand, yes, it could be seen as a short-term negative because this source of demand will decline. But on the other hand, if it destabilizes the Indian government, well, actually, that's probably very gold positive. So you can sort of look at both sides of this, and there's a reason to trade it in both directions, if you ask me.
And potentially there could be a rampant black market in gold if that was to happen.
Well, let's face it. I mean, again, this is something that is in demand by every household in India, wealthy or not wealthy alike. And you can't simply outright ban something like that. There will be some permeation of the border. There will be ways that gold gets through anyway because the demand is there. I mean, in the same way you try to ban drugs or certain drugs, say, from a country, but they still find their way in, the same can happen with gold.
If you do have gold in your portfolio right now, what should you do? What are you thinking?
Well, I believe that it is prudent in the world we live in of excessive debts, excessive leverage, banks that are still undercapitalized, lots of moving parts in the world and reasons to be concerned. I think everybody should own at least some gold. Zero is never the right answer, even in the best of times. And when you're concerned about things, then you should own somewhat more. If you run roughly a century's worth of data. So let's take the long view here. If you run roughly a century's worth of data and you churn through it stock market performance, bond market performance, and also gold, the right amount of gold to have in a sustainable, stable, long-term portfolio is on the order of 10% to 15%, which is much more than most people have. And so I believe that at a minimum, people should be accumulating with a view to getting to that level. Roughly 10 to 15% of their liquid net worth should be in gold.
Okay, and just want to mention before I let you go, we've obviously got the Fed decision coming up in December. It's looking likely that they're going to move, right?
Indeed, and this is one reason also perhaps why there's been some pressure, downward pressure on the gold price recently. Other factors equal, if the Fed is truly going to start tightening policy meaningfully, that is gold negative. Why? Because it's dollar positive, right? I mean, and the dollar indeed is strong versus pretty much every currency in the world right now.
Yeah.
That's correct. And so while this has been a gold chat we're having here, actually you can turn it right around and also spend time talking about why the dollar itself is so strong. And this hawkish Fed rhetoric we're getting is a big part of that explanation.
Yeah, all right, lots to come. Thank you very much indeed. That's John Butler there talking to us about gold today. He is indeed from Gold Money and Trump and the Trump factor, and of course India as well. Always loads to talk about when it comes to gold.